Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be going over my M1 Finance portfolio. And in that portfolio I invest in, a little bit more risky stocks than the, dividend stocks and ETFs that most of my investments are in, but I do think that it's important just to have some diversification among your investments, and just having a little bit more risky investments just gives me some more room for growth, but without room for losing a whole ton, since it's not that much of my investments overall. So I also wanted to say that I'm going to be doing another Q&A video for my 100th video, which should be coming up in a week or two. So I'm really excited for that. So if you want to, leave some questions in the comments below for that Q&A, or DM me on Instagram or something like that, and I will certainly include those in that video. So this is my portfolio with M1 Finance. It's currently valued around $310, so pretty small, like I said, but I'm just investing a little bit every month, and continuing to invest over time, and hopefully that will grow a lot in the future. So before we look at the portfolio specifically, I want to mention M1 Finance's referral program. If you do want to sign up, I personally think it's a great platform, and I would recommend it, especially for people who are new to investing and just trying to learn a little bit but not get super involved, because it allows you to be pretty passive with your investing and not have to pay attention to it a whole lot. So right now they have a program where if you sign up using my link, which will be in the description below, if you sign up using that link, then you'll get $50 to your account once you fund your account with $100, and then I will get $50 as well. So if you just put $100 in the account, that's basically a 50% return on your money already. And you could just take your money out and be done with it if you wanted to, really. But I would recommend investing it, but you could just take it out if you wanted to. So if you are interested in signing up, or you just want to get that referral bonus, you can sign up using my link, and I would really appreciate that. It would definitely help me out, but it would help you out too. So looking at my portfolio here, just looking at the activity, the last video about this portfolio was sometime in June. So we did, at the very end of June, get a dividend from VGT, which is the Vanguard Information Technology ETF. So we got a whole 6 cents there, which, as we look back at the last dividend we got from them, was 3 cents. So that's awesome that dividend doubled. If the dividend is able to double every single time we receive a dividend, pretty soon we're going to be receiving a lot of money, which realistically it's not going to double every single time, but that would be cool if it did. And then we deposited our normal $25 at the beginning of every month. I'm thinking of upping this amount maybe a little bit, and maybe just doing it every week, just maybe like $10 every week. So overall it'd be a little bit more every month, but that would allow me to get a little bit more dollar cost averaging over time, if that makes sense. But we also obviously made those buys automatically. M1 Finance just does that for you on July 1st. So it's been about 3 weeks since then. And looking at these holdings here, my largest holding, I think, is ARK-K right now, the ARK Innovation ETF, and I'm a little bit down on this. They've been down a lot in the past few months, but we're definitely starting to recover here. So that is definitely good to see. You can see we're down a bunch here, in May. So I'm glad that we're recovering a little bit there. The price was probably around 130 when I started buying, probably a little bit higher since my share average price down here is 130. So I am, I did scale back that position in my portfolio. So overall it's getting to be a smaller position, which I generally like. And the next one, which will in the future be the largest position, is VGT, that Vanguard Information Technology ETF. And that one has been doing fantastic for me, up about 21%. The next one here is Google, GOOG. And this is about 9% of my portfolio, and they are up a whopping 55% for me in my portfolio, which I'm really surprised by. I really did not expect it that much. You can see there my average price is just under $2,000 here, and their price right now is at $2,756. So that's pretty awesome that I'm up 55%. But the one thing to keep in mind is, like, the way M1 Finance calculates your returns are a bit weird, and I don't exactly like it the most. So for example, if we go back in here, you can see that my average price is around $2,000 and the current share price is around $2,756. So my investment has really only grown about 35%, I think, if that math is right, maybe closer to 37%. But the reason it says it's up more than that, I think, is because basically that's in less than a year. So that's sort of trying to annualize it based on, when exactly I deposited the money and all that kind of thing. So it's a bit confusing sometimes. And looking at this right here, their market cap is around 1.9 trillion. So they're almost to that $2 trillion market cap as well that Microsoft and Apple are at. Microsoft recently got there, so that's exciting. Sorry, I'm getting off on a bit of a tangent. But the next stock here is Shopify, and it says this one is about 8.8% of my portfolio, and this one is up around 56% as well. So that's pretty exciting. My average cost is around $1,100. Current share price around $1,600. Shopify is, I would say, overvalued, but I definitely thought it was overvalued at $1,100. So either it's way overvalued now, or it just wasn't overvalued at $1,100. But some of these growth stocks are just interesting to see where they're at. Then going down, PayPal, this one about 8.6% of the portfolio, up around 34%. Amazon about 8.6% of the portfolio, up about 17%. Tesla about 5.9% of the portfolio. This one's down about 16%. You can see my average cost is around $734, and currently the share price is $643. So, this one is for sure a long-term hold, and I think, in the future, Tesla is going to be worth a lot more. And they're doing great things, but just because of how much attention they got over the last year or two, the stock price has just gone a little bit parabolic above, what the fair valuation would be. And so it's just going to kind of float around for a while until they start to live up to that valuation a little bit more, I think. And then moving down here to Square, this one's about 4.8% of my portfolio, up about 23% on this one. And then Square, is sort of in the fintech, digital payments area. And then, MasterCard and Visa are pretty similar to that. MasterCard at 4.8% and Visa at 4.7%. Both of those are up right around 17%. So that's really funny that those, holdings are, they're pretty similar companies. They do about the same thing, generally speaking. It's pretty funny that they have performed pretty much about the same. And I actually made a video recently on Visa stock. So if you want to check that out, I'll leave a link right up here. And then my next holding is Adobe, ticker symbol ADBE, and they're up about 37% for me, which is 4.6% of the portfolio. And then the last two here are down a fair bit. Spotify, about 4% of the portfolio. This one's down about 21%. And then Jumia, 3.2% of the portfolio. They're down about 60%. Which is pretty staggering and a little bit scary, because one of the things that, I think is super interesting is, just how those percentages work out, because if something falls 60%, it has to increase over 100% for you to get back to your original investment. So if you had $100 and you lost 60% of that, then you're down to $40. Well, then if you double that money, that's a 100% increase. Well, then you're at $80. So you'd really have to increase 150% to get all the way back from $40 to $100. So it's just something to consider when you're investing in companies like this, is that if it falls a lot, it's really going to take a lot to bring it back to those previous levels. But one of the things I'm definitely considering doing is adding a little bit of extra money and just directly buying Jumia, just so I can get a little bit better average cost. But over time, I think, it will even itself out, but I am considering doing that. I'm not quite sure if that's the best idea, because I don't want to, start getting myself down this rabbit hole of just investing individually in these companies when I want to and when I feel like it's the best time, because, that's the whole point of this, is that I'm not going to be affected by emotions or the market. I'm just going to keep investing steadily over time. But on the other hand, sometimes there is a really good opportunity and you have to take advantage of it. And that's sort of where I'm at with Jumia. So I might do that maybe within the next month, and then I'll let you guys know in the next video. So I would love to hear what growth stocks you guys have been buying, and if you think there's any, quote unquote growth stocks that are currently undervalued, because it seems that pretty much everything seems overvalued these days. So it's really hard to find, these good deals, especially in these, growth type stocks. So I'd like to hear about that if you guys have any suggestions on that. And I'll leave a video up here to the last portfolio update I did on this growth portfolio, and I will see you guys in the next one.